Now, a lot of hay, though, has been made about Indian jewelry demand falling off a cliff in the third quarter. Imports are going to be half of what they were in the first quarter of 2011 and 2012. Are those fears overdone then?
I think people are correct in seeing weakness in the second half of last year, but to an extent that was just because of people having brought forward their purchases into the first half of last year. And as we move forward into 2012, we would expect to see something of an improvement in the first quarter, whilst we have this period of somewhat more restrained prices. But it wouldn't surprise, in fact, if we see a quite marked decline year on year for the Indian market. So that is an area of weakness that we will have to manage.
When does Indian demand then stabilize? What needs to happen?
I think much lower volatility would obviously help, and something of an improvement in the dollar rupee would also be significant. You could see quite a marked pickup for demand from India, and that would be especially the case if general market consensus is that we would be looking at far stronger prices towards the back end of 2012. Another factor, though, to consider for India, which is a negative, is that this year is less auspicious for weddings than last year. So the number of weddings that should take place in India, we are expecting to be substantially lower than last year.
Can China demand make up the fall off in Indian demand?
We are expecting to continue to see robust demand coming out of China. That the investment case there remains very compelling whilst you have negative real interest rates and high inflation in that country. So that appetite for gold does remain very strong, and so we would expect demand there to continue growing at a quite healthy rate. Whether it'll quite negate Indian losses is a difficult one. My hunch would be a net loss.